Welcome to the Techno Fundamental Report for October 23rd. The stock market is a device for transferring money from the impatient to the patient. Basically, Buffett is saying you have to be patient. We're going to hear this a lot today because I'm really focusing on a new book that I'm going to tell you about. Everyone is a genius in a bull market. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. Bull markets go to people's heads. If you're a duck on a pond and it's rising due to a downpour, you start going up in the world, but you think it's you, not the pond. Charlie Munger. In other words, keep your head here. Don't become complacent. We've been in a nice bull market since, April 7th of this year. But don't let it go to your head. Be patient. There's a new edition out of Reminiscences of a Stock Operator. I recommend it highly. You can get it on Kindle for about $4. Not bad at all. But the thing that's interesting about it is at the end of every chapter, Max Davidson, who's the editor, writes a summary of how the policies of Livermore back in the 1915 area apply today. So it's a good book. I read the original. The main takeaways I've had, though, has been interesting because things were so different back then, but then again, they're the same. Now, the biggest difference was lack of liquidity. You have to realize that back then, if the Dow jumped 10 points, it was considered a major rally. If you bought 100 shares of Union Pacific, you would move the price. So there was a real lack of liquidity back then, which I think was the primary difference. Now, I'm going to talk today about the battle of survival, investment survival. And it's about basically strategies to help you preserve your portfolio during a difficult time. Now, Churchill had a pretty difficult time back in, World War II. You had the Germans coming through where they were least expected. The British did not think they were going to break the Maginot Line, but they did, and they came through. And so you had Dunkirk. And, so the point I'm making here is that Churchill was a general, basically, that had to command his troops. So when you're managing a portfolio, you don't want to lose the portfolio. You don't want to lose your army. So what Churchill had to do was abandon his original plan, which was his holding at the Maginot Line, and then realizing that plan was not going to work, and then shifting to another plan of just getting his army out of there and into safe hands. So lead me, follow me, or get out of the way. George Patton. Livermore talks about how you have the generals, which are the most prominent stocks or market sectors, are the generals. They lead the rest of the market. During a bull market, these leaders are the first to move up, and during a market reversal, they are the first to show signs of weakness or sell-off. Disregarding the big swing and trying to jump in and out was fatal to me. Nobody can catch all the fluctuations. In a bull market, your game is to buy and hold until you believe that the bull market is nearing its end. To do this, you must study general conditions and not tips or special factors affecting individual stocks. Jesse Livermore. So we're going to talk a lot about Livermore here because this new book, which I would really recommend highly, is, and I just finished rereading it for probably the 10th time, but this is the latest edition. And there's just a lot of wisdom there. So basically, these were his top points of the book. Trade the trend. If the market's in an uptrend, there's a high chance you're going to make money. Wait for the right setup. In other words, be patient. Wait for the right setup, which is, you've got to have a strategy where you say, okay, this is buyable, this is not buyable. Wait for that. You cut your losses quickly. You know, we do all this research that we do, and we get down to the nitty-gritty to make the decision, and we still don't trust it. But that's because we're skeptical types. If we're wrong, we got to cut those losses, but hopefully we're not. However, when we're right, let the profits run. Don't average down. If you've got a losing position in a stock, you just got to realize you're wrong and just don't buy any more. Trade based on price action. In other words, if the price is going up, good. If the price is going down, bad. Master your emotions. Don't get too worked up about these things. You have to use mathematics. Mathematics remove emotions. That's very important. Trade like it's a business. Make this a full-time exercise. Manage your risk. Don't plunge. Don't get into everything at one time. Just take your time. Record and review your mistakes. You got to go back and review what you've been doing. So the main point I think Livermore makes in the story is that you can't be a jack of all trades. You've got to focus on, like we focus on growth stocks. You know, people come to me and say, what about gold? I don't know anything about gold. What about oil? I'm really not an expert on oil. You've got to stick with what you know. So it was never my thinking that made me the big money for me. It was always my sitting, which means back to this point here, you know, be patient, wait for the right setup. In other words, when I originally heard him say this, when I read the book initially, I thought he meant buy and hold. You hold. That's not what he meant at all. It meant that you were trying to wait for the right setup, wait for the right arrangement. Now, the generals, I'm going to go over the generals here because we've been talking about when the generals lead, the troops will follow. So here we have Apple. And these are stocks that I think are in the past leadership or current leadership, but I think more past. Now, here you go. It breaks out on earning. You know, they announced their sales were up, but then it kind of looks like it's failing. It's coming right back into the base. I don't know. We'll see. Now, here's Amazon. Basically in a downtrend. You know, now it's had a nice uptrend, went sideways. Now it's going into a downtrend. I don't know. It doesn't look that positive. Constellation Energy. Now, remember, with artificial intelligence, we were all excited about the fact that we needed more electricity. Well, these stocks are starting to really break down. What's going on here? I don't know, but I'm just telling you, the generals lead, the troops will follow. And the generals don't look good right now. Here's GE Vernova, another energy-related play. Look at the volume here, very major volume. So we've got a major break in these utility-related AI stocks. NVIDIA, struggling with the 50-day line. You know, you had the big drop here 2 Fridays ago, stabilized, but is really not recovering. So I'm just saying that the generals are not leading the way I would like. So let's just look at the market overall. So the NASDAQ, actually the indexes look fine. There's not a problem with the indexes. You know, we had that big drop on that Friday. We've been consolidating. We're trying to recover. However, we're pulling back in here. Again, I would just continue to stay cautious here. I would not get real aggressive. S&P 500, same thing. You got the major break, consolidation, try to rally, kind of pulling back in here. However, the long-term primary trend is up, so we're still in a bull market, but I think we're going through some leadership changes. We'll just have to see. Talk to you next week.